10 years from now, we're going to look back and you're going to see a whole new wave of millionaires that became millionaires through this economic craziness, through these volatile times, because more millionaires are made during recessions and market crashes and volatile times than any other time. And this is where now, if you are younger, if you're a millennial, what you want to be doing is you want to be looking for the right opportunities. Even if you're not a millennial, you want to be looking for the right opportunities where now you can capitalize on what's happening around you, because the reality is this next decade is going to change the landscape of our economy. It's going to change the landscape of literally how our system functions, and you are going to see some people become incredibly wealthy because of it, while other people are going to sit there and watch it happen, while other people are going to be crying that it is happening. And this is where you got to decide, which one of the three people do you want to be? Do you want to be one of those people that are just sitting there crying about how the system works? Or do you want to be one of those people that are sitting there just watching it happen? Or do you want to be one of the people that's taking advantage of the opportunity? That way in the next 10 years, you could be one of the people that becomes wealthy because of all the craziness happening in the world. The opportunity is here, it's around us, and it's coming. And this is where now you just have to decide which one of the people that you want to be. Because if you want to be one of the people that takes advantage of the opportunity, it requires two things. One, it requires the right financial education of knowing what to do. And second, it requires you to be prepared. Because now if you're educated but you have no cash to be able to capitalize on the opportunities, well, it's going to be more difficult. Not impossible, but more difficult. So you need to be prepared, meaning have the right resources, the right education, the right cash, the right whatever it takes to go out and capitalize on the opportunities. And this is where now the financial education will help you actually do that. If you've been subscribed to my channel, you already know the difference between an asset and a liability. But let me give you a quick 15 or 30-second refresher, because an asset is something that you buy for the sole purpose of making money. This could be a stock market investment. This could be a real estate investment, not the home that you live in, but a rental property that you purchase. This could potentially be investing in a startup. This could be your own business. This could be owning physical gold. This could potentially be cryptocurrency. So an asset is something you buy for the sole purpose of making money, versus a liability is something you buy to look rich. So your liabilities are things like your Gucci, your Louis Vuitton, your cars, your vacations, anything that you're buying that isn't directly putting money in your pocket. Those things are liabilities. And while these liabilities will make you look rich, because when you have a nice car, you have the nice handbag, you have the nice stuff, you look rich, but these things are actually keeping you broke, because now you have less money to buy more assets, which actually make you richer. See, it's kind of weird, because the more assets you buy, the broker you look in the short term, but the richer you're actually becoming. Because when you're spending more money buying stocks, and you're spending more money buying real estate, and you're spending more money buying these investments, you have less money to go out and drive a fancy car. You have less money to go out and have all the nice flashy stuff, and less money to go out and go on these nice vacations today. But over time, now your assets can grow, and now you have more money to go and do whatever you want without having to go and stress about the money. See, there's nothing wrong with having nice things. I don't really care if you buy designer stuff. I don't really care if you're spending a lot of money on nice things. My worry is I want you to be able to afford it first. So now, in this economic environment that we're in right now, where we're seeing a lot of volatility, we've seen the stock market get hit, we've seen cryptocurrency get hit, we're seeing the real estate market now start to slow down, we're seeing the economy start to slow down, you have to understand that this does create opportunities. You've heard the saying that one person's trash is another person's treasure. Well, in this type of environment where people lose jobs, when assets get hurt, this is some people's trash, but it can also be your treasure if you're willing to think a little bit differently. I've talked about this in multiple interviews, but the word recession gives so many people anxiety. It causes stress. It causes a lot of just anxiousness, because you think recession, layoffs, bad things, the economy slowing. But for the minority of people, if you start to think different than the majority of people, now you can hear the word recession and hear opportunity. And this is where now you have to be able to find the right opportunity. But in order for you to do that, you got to have less money go into your liabilities. That way you have cash to actually purchase investments. Because when you have these types of slowdowns, when you have these types of volatile markets, what that means is now you're going to have some assets that go to zero. You're going to see some companies go bankrupt. You're going to see some companies go under. You're going to see some bad deals that just go and get annihilated. But what that also does is that brings the price of good assets down as well. And this is where now you can come in, find some of these good assets and purchase them at a discounted price. Think of it like Black Friday shopping for investors. Most people think of Black Friday shopping and they're gonna go and buy a whole bunch of liabilities. You're going to Macy's and buying a $300 sweatshirt or jacket or whatever you're buying from Macy's. But for an investor now, what you're doing is you're finding a good asset at a discounted price. Now, this is where one, you have to have the right financial education, and two, you have to be prepared. Because now, for the majority of people, in order for you to see this opportunity, you first need to have the right financial education, because for most people, what happens is they hear crash or recession and they run away. They just start pinching their pennies, and now they get scared, and now they are all talking about how people are losing their money in the markets. People are losing their money in whatever asset class you want to talk about, so you should not buy, and which is why you want to sell at a loss and just get away from every investment possible, because it's scary and things are going down. But what the minority of people are doing is they're saying, oh, you're telling me that these assets are going down? This is when I can come in and buy, because now you can buy more for the same amount of dollars that you have. You're just buying them at a discounted price. And so now you want to start thinking differently, where you want to find the discounts. You want to find the good investments that are on sale. But that again requires the financial education to find the right investments. But then two, to be able to capitalize on them, you need the cash in order to do that. Now, this is where preparing is so important, because now when times are okay, you want to be working hard to earn more money and spend less money. That way you have a margin. Because now when you have this margin, you want to be able to take this cash and put it aside. That way you can use this money to invest. Now, I'm not saying that you need to perfectly time the market. You don't have to perfectly buy at the bottom, because it's impossible to time the bottom. There are so many other factors happening in the economy that can influence when the bottom will be. So you never want to try to get into the business of trying to perfectly time the bottom. But what you can do is now you start looking for the right investments. You start looking for opportunities. Maybe you start researching stocks and you say, oh, I would love to invest in this ETF, or I would love to invest in this company. And when you see the prices of these assets go down, you can come in and buy. And you can buy them in phases. That way, if they keep going lower, you can keep buying more. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.